All right, what is up, everybody? Welcome to another real estate wholesaling live analysis. This is our 38th episode, doing it live over here on Meetup and also, of course, through Zoom. If you happen to be new here, welcome, welcome. This if it's your first time joining, we do some real estate wholesaling analysis in any market over here where we look at some properties. If you have some questions throughout the presentation that it's available that we're going to be going through. It's you can ask your questions there, or if you have any other questions or anything else related to your real estate wholesaling or just real estate journey overall, by all means, drop your questions. We are going to have like a quick Q&A after the presentation and the analysis as well too. But you're also able to drop your questions on the chat uh, throughout the presentation. After the presentation, through that Q&A, you are going to be able to unmute yourself if you happen to have like any more extensive or more detailed questions that you want to ask. And then afterwards, there's going to be a breakout room, so that way you're able to network with other investors, maybe other wholesalers, real estate agents, contractors, lenders, title companies, whoever happens to be on whatever field they be working on in real estate. Again, it's always best to network with one another. So with that being said, we're just gonna go jump into the presentation really quick, and then afterwards jump into some real estate wholesaling live analysis. If you happen to be new, the presentation and everything gets recorded. So if you don't get to be throughout the whole live Zoom, it's perfectly fine. The recordings are going to be available on Meetup, so that we're able to go back to it and review or see anything that you missed out by any chance. But other than that, let's just go jump right into it. So first things first, real estate wholesaling, it's pretty much getting a property under contract, and then getting that a contract, do a sale of assignment contract to find like an end buyer or an investor who's willing to work on the property themselves if they happen to see a good fit for them, or based on their numbers and how they like to calculate a lot of their stuff. So the main focus that we focus on this series, especially on this episode as well too, and all future ones, is just going through the offers, what makes an offer, what makes it a good offer, also understanding like some basic repairs as well too, and figure out if it's going to be like worth your time, if it's going to be a deal, where your deal should be lined up, and a few other things, key secrets that's going to help you guys understand about that. But of course, real estate wholesaling, there are major steps along the way, and then those major steps are built up of smaller steps as well too. So it's not just getting a property in the contract and that's it. It's a little bit more than that. I'm not going to walk through the entire steps of it. I'm just going to be going through what makes a deal work, and based on my experience from um, real estate wholesaling. So first things first, we have to understand the first fundamental pillar, which is going to be ARV, or after repair value. And what this is basically helps you understand your market, the what properties are going for or selling for once they get fully fixed and flipped from other investors in the area, or other properties that are just look like they were a project. Sometimes you can tell by how staged they are as well too. It really depends on when's the last time that fix and flipper bought it, and then how quickly were they able to get it back again, like in the market. But the ARV basically tells you how the market reacts and what the market is selling for, based on properties that are getting fixed and flipped. And the ARV, I'm gonna show you guys how to find the ARB like in a matter of seconds on any single market. If you happen to have like an address or a property you want us to analyze, by all means, you can drop it in the chat. But if you don't have like an address, but it's perfectly fine. What I'll do is I'll select my random wheel picker, and then just from there go through the process of analyzing and try to find the ARV, which is pretty easy. The only thing with it beyond the ARV is understanding how investors buy a lot of their properties. So not all investors calculate their numbers all the same. They're all going to be doing things very different from one another because they all have different expert. They probably work with somebody else who was an expert on fix and flipping, and they calculated that stuff, and then along the way they picked up like their own niche, what best works for them, what doesn't work for them. So when you're working with buyers, you have to understand how they calculate a lot of their deals, and you kind of want to work a little bit of reverse in terms of like wholesaling, where you want to understand how buyers buy. Well, first pick up a market, then understand how your buyers buy. Once you understand how your buyers buy, look for properties that meet that criteria for your buyers. It's going to be like a handful of them, especially all of them are going to be having different formulas. But you want to understand how, at the end of the day, you want to understand how they buy, because again, if you're just going out there on a blind eye, just picking any random properties and then hoping that your buyer's list end up picking like your property that you got off market, it's all really going to be hopes and hopes, and maybe it might not fit their criteria whatsoever. So it's best to always understand how your buyers buy at the end of the day. Additionally too, the first pillar is the ARV. The next pillar, which is part of the formula as well too, understanding repairs, and don't spend a lot of times on the repairs as well too. The repairs are going to be pretty much basic. There are going to be some cities and states where materials and labor are going to be a little bit more expensive. Just like here in California, things are a little bit more expensive. These are average prices of repair costs nationwide. But with those expensive states and cities, you just want to add a good room into it. And I would say add $15 to $20 more on the price per square foot than these average repairs over here. The reason why you want to stick with average repairs, because at the end of the day, it's really up to your end buyer on how much they want to spend. And then sometimes they already have like a contractor set in terms of like business relationship, where they're able to bring like their costs down as well too, and then they turn those contractors into like partners. So it just works into like their benefit to bring like their costs down. So if you happen to be working on a project property where it's going to be a fix and flip and the property needs $35,000 worth of repairs, if you bring it to three investors, investor A is going to end up telling you, oh, the property needs $50,000. Investor B is going to end up telling you, oh, it needs a little bit more than 35, maybe like 40, 42. And then you're going to have investor C, oh, I can get away with this with like 25, maybe $30,000 worth of repairs. So at the end of the day, it's really up to like your end buyers on what it is that they want to do, the materials that they want to use. So don't spend too much time on the repairs, because I see this numerous times where you want to get in touch with it. Sometimes you don't even put any repairs at all too, but not adding any repairs at all whatsoever kind of affects your offers as well too. So again, it just really depends on your buyers. I understand and focus a lot on their relationship with them, so that way you can know how they're going to be calculating a lot of the deals, so that way you can look for deals based on what the criteria that they're able to meet. There's a question, Cody, how do you calculate ARV of properties that have a bigger size lot? So I mean, that's pretty much, it's the same thing. You got to be looking for properties that, if you're looking, which I'll talk about it in a few minutes, as a matter of fact, is the Oh, so I'll answer your question in just a second. It's with the repairs, when you look into the repairs, it really depends on what kind of projects you're looking into as well too. So average repairs is gonna be 25 to like $40. This is gonna be like the average fix and flip type of deal, which roughly takes between 2 to 4 months. Also depending on, again, the buyer, how much more detail they want to do. Were you doing like major areas, floor, kitchen, bathrooms, painting, windows, doors, roof, occasionally landscaping as well too. Next is going to be more in the gut job repairs. Gotcha repairs, this is going to be like a full demo occasionally. And then additionally too, if it's not like a full demo where you want to, it can get stripped down to like the studs. It's just all the wood that make the wood frame of the home. But all you're taking out is pretty much everything inside of it, and then rebuilding everything inside of it as well too. It is going to be a little bit more costly, but again, usually with gut job repairs, the prices are going to be very, very crazy low in some areas, like less than 50, maybe 100, less than $100,000, depending on like on your market area. But from there, it's basically starting all over again. And extensively, sometimes you might come across major issues in terms of like plumbing and also foundation. So that's something crazier that does happen in some gut job repairs. Now, when we're looking at properties, you want to compare apples to apples, which is going to answering your question, Cody. When you're looking at properties, you always want to look for similar properties so to help you extensively find like your ARV. Is you want to find similar comps, depending on what it is that you're looking into. First things first, you want to compare is the living space. This is where you want to look for similar comps that are plus or minus $300, $300, 300 square feet on the living space. So if the property is 1,500, then you're gonna go up 300, so like all the way up to 1,800, and then you're gonna subtract 300 from the 15. So from 12 to 1,800 is where you want to look for comps, and that's gonna help you find like the ARV. Now, on properties that have bigger square footage, this is where you want to compare in terms of the lot size. Usually these properties that are more ranch style, you're gonna have a quarter of an acre, half the 3, 4, 5, 6, 10. You want to compare apples to apples. So you're gonna be going plus or minus on the square footage of the lot size to 2,500 square feet on the lot size. And again, this is you're gonna see like whatever platform you use to like look for your properties. You want to look for set like those filters to look into the square footage of the lot size. But again, you want to compare more when it starts telling you the details that, oh, this is a quarter of an acre type of property. Oh, this is a 3-acre property. Or this is a 30 acre property. So again, when you're looking for those, you want to make sure that you're looking for those comps that are similar to the lot size. Now, when you're comparing lot size as well too, you are able to go a little bit more extensive because again, lots are going to be taking a little bit more space, and you have to go a little bit more extensive because the next set of rules on looking for comps, you want to stick within a half mile to a 1 mile radius. If it's going to be like a single family residence. But again, if you're looking in a lot of those ranch style or maybe like a lot of farm style properties, then you are able to go a little bit more extensive, like 5 to like 10 miles. Anything more extensive than that, then that's when you have to like play a little bit of the price game. The property's further out, but then the price has to come down a little bit just because it's going to be a whole different area as well too. And then sometimes it could be a whole different state as well too, because some farms are just right at the border of the state line as well too. Looking into the years, you want to again stick to apples. So compare the years of the properties, plus or minus 10 years. You don't want to compare a brand new 2024 new built home to a 1960s home. It's just the materials, the labor, everything, the regulations, everything's pretty much very different from those two times. And so again, you want to stick to looking for similar properties that are similar to the year of your subject property. And when we're looking for those properties, you want to find at least three to six properties. Sorry, 3 to 5 properties that are fully updated. So those are going to be sold properties, but also you can look at the pending properties as well too. Look at the properties that are currently getting fixed and flipped and they're actually being sold and they're on the contract at the moment, because properties that have sold in the past, it's telling you what has happened in the past, but what's actually happening right now in a specific market is looking at properties that are under contract at the moment. And then the properties that have not sold, or all the properties that are available on Zillow, Redfin, Trulia, whatever platform you're using to find your properties at, that's the properties that are available is future properties or future markets that are still to come because they haven't sold just yet. So current markets are always going to be what's selling and what's under contract at the moment. And when you're looking at the properties that have sold in the past, you want to go a little bit, you don't want to go too far out. You just want to go between 6 to like 9 months on that time frame as well too. Go to the property that I'm dealing is more of a unique situation. Can I ask you more about it? When yeah, so we have a Q&A after the presentation, because I'm going to be walking through an investor breakdown so that way you guys can understand what makes like a deal, get a perspective from an investor side as well too. Then we're going to work on the analysis perspective, where we're going to be looking using some free platforms, the Redfin, Zillow, Realtor, and PropWire to look at some properties. And I'm going to be using some of my tools that I've designed to help me expedite my process on analyzing some properties. If you happen to have like a property to analyze where you don't have to like explain the situation, then by all means we are going to be I can analyze that as well too. But if it's like very unique situation, then we can share about it afterwards. So this is gonna be hold on, let me see this. Is it sharing the right screen? Yes, it is. So this is gonna be an investor breakdown really quick, so that way you guys can understand what makes a deal work sometimes for an investor. And again, it really depends on how they calculate the numbers. So pick your market, analyze like your market area, and then from there start looking into investors, understand how investors buy in that area. So this is going to be one of those perspectives to understand where they buy. So first things first, you're the wholesaler, you're looking for properties, you're marketing for properties. If it's pay-per-clicks, if you're driving for dollars, if you're door knocking, if you're sending out flyers, letters, whatever it is, you're trying to do inbound and you're trying to do both outbound as well too. And then you happen to get a property under contract, because that's the very first step. We have to get a property first, so that we could bring it over to a buyer. Then you have a property for from a seller who's interested in selling their property um, for X reason, but they're really motivated. That's the key thing right there. They're really motivated on selling their property. They just don't want to live there anymore. Maybe they want to downsize on their property, but the property is free and clear of any debt. So it's just they're selling the property as is, and they're interested in getting for their property $764,000. So cool. You know the price. You understand they have a little bit of motivation. It's really key. It's an essential key point to focus on that motivation, why they want to sell, and how quickly do they want to sell as well too, depending on where it is that you are as well too. But also you want to understand what's actually happening with the property as well too. If you're working with homeowners directly, you can ask them simply like, "Hey, Mr. Homeowner, if you had 60 to like $80,000 available right now, what kind of updates would you do to like your property yourself with those 60 to $80,000?" That's one way to like ask him like, what does the property need? So that way you're like on the phone, try to work all the numbers, try to understand the situation. You're just pretty much like just doing everything over the phone. So that way you don't have to waste like the time of like, oh, let me go check out the property. I'll get that. So that way you can kind of prematurely prepare the property for your buyers. So you kind of like fishing for buyers already beforehand to get like the perspective, and then just without any pictures, unless if you're able to go in like in person and get the pictures, by all means. But first things first, we want to understand is get the asking price. Two, understand the motivation of the seller, and then three, get the understand the repairs or what kind of work the property needs. So again, the simplest way of finding out is just asking the homeowner, hey, if you had X amount of dollars available right now, what kind of things would you do to like the property? And that's basically what they say is the kind of repairs that they would want to do, or the property kind of needs as well too. Sometimes they will tell you like bluntly, oh, the property needs a lot of work, like it needs X, Y, Z, A, B, C, D. It just, they start naming it, and those are really great sellers because they really want to share like a lot of stuff. But again, it's just how you're working the conversation with them as well too. But for example, this property that we're looking into, this imaginary example, is going to be a total repairs are $80,000. This is one of your markets, so you already know how much your markets sell, how much your property sell on this specific market, and then you already know that the property that you're looking into, the property can sell for $875,000, or the ARV for this property is $875,000. So this is the way an investor will work on this deal if they're looking to work on it based on their 70% strategy. Again, not all buyers calculate the same, so it is essential for you to understand how they calculate. But based on this strategy, this is how some buyers will do it: is they will get the ARV, they will subtract the repairs, which will kind of give them like a new ARV, which is at this point is $795,000. Out of those, uh, $795,000, that's where they multiply their 70% strategy, which the 70% strategy stands for a few things. First things first is going to be the profit, how much potentially can the investor make out of the deal. And then the second one is going to be closing costs. So both of those two combined is 30%. So how much they're going to be spending like on closing costs in the front end and also like in the back end as well too. And then biggest thing is how much profit they're going to be making. But these are not set numbers. The set numbers will be coming in a little bit. So for this example, the investor, the most after the 70% strategy, the most that investor is willing to get on this deal or willing to spend on this deal is $556,000 with $500. That's the most, or that's the investor's perspective of the maximum allowable offer. You work with the seller directly. You're able to engage with them. Again, you're able to get a sense of where your buyers buy, and then you happen to get the property in the contract for $550,000. The reason why it's $550,000 is because you let them know, hey, this is going to be a cash offer where we're taking care of pretty much everything on your side, and the $550,000 is what you're walking away with. It's not an obligation to you. You can perfectly fine reject like the offer as well too, but the $550,000, you either get a check if you want a check, or this could be a direct deposit to your bank account. On the day that we close on this deal, the title company is going to send you one of those two forms of payment. So our offer that we're bringing over to you is basically what you're walking away, or that direct deposit that's going to send over to you. The only thing that you'll be taking care of on your side is just going to be the taxes side. We're not going to be taking care of that. It's the only thing that we won't be able to take care of. But that's basically the wire that you could get on your side, Mr. Seller, if you're interested on selling like your property. And again, you're working negotiations, but you're pretty much like firm on that price point, but they really want to move. They really want to downsize. They don't want to deal with the property anymore. Maybe they just tired of the area as well too, but they just want to move on forward with it. Not all examples are perfectly like this as well too. Occasionally it will happen. But it's all about just how you're talking with the seller from the beginning as well too, and focusing a lot on their pain points. So you get the property for $550,000, which is the contract that you have. So A to B contract, A being the seller, B being you, the wholesaler. Now, next, the process is doing an assignment of contract sale, and what that is basically you promoting the property for buyers out of your buyers list, or maybe just going on Facebook groups where it's just buyers that are interested on off-market properties, and then you start promoting your assignment of contract sale. Notice how I'm saying assignment of contract sale, and I'm not saying property, because if you're marketing your property, you're basically doing a real estate agent, and you can get in trouble for that. So what you're doing is marketing the property as an assignment of contract sale, because you're doing what you're telling everybody is, hey, I have this property. If you're interested in getting this property, it's going to be an assignment. So it's going to be assigned over to you. You're going to be the end buyer who's going to deposit earnest money deposit, non-refundable, and also you're going to be taking care of closing costs, paying cash, depending on what's written up like on the contract. So that's what you're going to be selling it for, which at this point is $20,000 more than what you got the property in the contract for, which makes your wholesale fee. So that assignment of contract sale, it's really up to you on what you wanna get out of it. And you might be asking, well, why would I sell it more than what that investor is willing to get for it? Because you're the one who did all the work. You're the one who has the property in the contract. You're using your buyers to understand how they buy a lot of their deals. If you look at any property that is on market, all the properties are always over listed over their value, 10, 20%. But if this property is off market and then you're just working on the relationship with your buyer and let them know like what it needs, they're willing to pay like your wholesale fee, because you're the one who did all the work. You did the marketing, you did the cold calling, you did the negotiation, you build a relationship, and you got the property under that. So you deserve to get paid whatever it is that you want to get. But it really has to make sense at the end of the day as well too, because now let's break it down from the perspective of the investor. So the investor is going to be paying the 570, which is your assignment. They're going to be paying the closing costs for your seller, which is going to be the following. So they're gonna pay, he or she's gonna be paying the 570 plus the closing costs, which is going to be 10%, 5% from the seller, 5% from the buyer, based on what the property is under contract for. And then the total repairs is going to be $80,000. So the investor total initial investment is $705,000. Now, if you break it down from their perspective is the following. First, we know the ARV is 875. From that, the investor is going to be subtracting what the agent fees of the agent listed the property on the market, closing costs again because they're selling the property themselves, and then additionally too, their profit is going to be $796,000. But then we have to subtract that 705 initial investment, which was all bundled up from closing costs, repairs, and also the assignment of contract sale, all of it combined, which was $705,000. The actual profit on this deal turned out to be $91,250, which it's at 11.48% profit for the investor. If you look at earlier, based on the 70% strategy, it was supposed to be a roughly 159. But again, because of your contract of assignment sale, the closing costs, that took a little bit more out of their profit. And again, it really depends on the investor if they're really satisfied with that. Some of them that I know for sure are more than satisfied. Some of them are even satisfied with profits that are even less than this, like 15, 20, $30,000 less than this. And again, it's really up to you to understand how your buyers buy and how what is it that they're looking out of each single deal in terms of like margins, in terms of like dollar profit as well too, areas, type of properties, years of the property, square footage, single family, multifamily. So that strong relationship is going to help you understand what kind of properties to look for, that when you come across, either if it's an inbound where a seller filled out a form or something that got sent over to you, or if it's outbound, you're out there in the neighborhoods, again, driving for dollars, door knocking, sending out flyers, whatever it is that you're doing to get sellers in front of you. You are going to get paid for that work as well too. But at the end of the day, you want to look for specific properties that your buyers need, where it makes sense for them at the end of the day. If you're able to get more for your investor, by all means, they're going to love you as well too. And sometimes it is going to be a plus or minus game as well too, because the property can sell for more than $875,000. Because by the time it gets fully fixed and flipped, it's going to be a different time frame. Like right now, we're in April. It takes 3 to 4 months, depending on the condition of the property, for an investor to get it out in the market. In 3 to 4 months, we're talking about July, August, maybe a little bit of September as well too. So that's going to be a different type of market on those months. So again, it really depends like on your investors as well too, on how quickly they're able to get it and the relationship that they already have. Because if they're already doing multiple deals in the area, they probably have a specific agent they like to work with, where the agent can sell the property quick. They already have contractors. They already have a title. Sometimes they have a title company as well too. So they have the entire boots on the ground for them to help them guide through that process. So hopefully I was able to give you guys a little bit of perspective. But the next perspective we're going to be going through is now going through some deals. But let me pull this up really quick. Oh, is where it is? Where's it at? All right, here. Awesome. Let me share my screen one more time. All right, here we go. So we're gonna look at any random market. So I have like a few 50 cities over here, and we're gonna be going through Kansas City, Kansas. I did that. We just did that actually last week. So we just did Kansas City, like Kansas City, Missouri, I think it was. Springfield, Massachusetts. All right, let's check out Springfield, Massachusetts. So now going back to the earlier presentation, I was talking about how do you find the ARV of your area in a matter of seconds. So I don't know Springfield, Massachusetts whatsoever. I've never been to Springfield, Massachusetts whatsoever. But based on this, this is going to be my market for whatever reason. So the way I'm going to do it, I'm going to use it through Zillow. Redfin, it does it a little bit. They don't have as much as extensive, and there's more properties listed on Zillow than Redfin as well too. But what I like to do is I have this real estate wholesaling. Let's see. Uh, Real estate wholesaling. Where's that? Is it this one? I think it's this one. Real estate wholesaling CRM. Let's go back to markets. Okay, cool. So this is gonna be, what do we do? I think last time we did Wyandotte County. So this is gonna be my market analysis, which I was mentioning we did do Kansas City, but I went on the I forgot Wyandotte County. I did Wyandotte County for this example. But for this, the way I'm gonna do it is I'm gonna pull my real estate wholesaling CRM. From that CRM, I'm gonna be scrolling down all this properties on Zillow, and I'm gonna head over to this beautiful section where it says explore nearby and average home values. So these average home values is a mix of recently sold properties that are updated and also some bad shape properties as well too. So this number right over here next to the city is basically my potential ARV. Whenever I look at a single property, all I have to do is cool. If I'm looking at a property in Springfield, Massachusetts, the properties are selling for 262. If I find the property that is selling for like $150,000, all I have to do is and in Springfield, Massachusetts, all I have to do is confirm, can the property sell for 262? Can it sell less or can it sell for more? It really depends because it really depends on what part of the city it is. I don't know where there's like the good area or the bad areas are Springfield homes at all whatsoever. So that's the only thing I really have to confirm. But all of these cities and numbers are basically my ARVs for all of these market cities on this area. So I'm gonna copy all of these. I'm gonna take it over to my CRM. I'm gonna go to edit, paste special values, and paste it. And the numbers on the left side are the potential ARVs. And then based on my strategy, let's say I want to fix and flip. My potential offers are going to be on the right side. So if I'm looking at Springfield, all the properties are selling for 262. I should be looking for properties worth less than $185,000 because the most I'm willing to spend is $185,000 on a property in Springfield. So that way I can resell it depending on the work that it needs. I can resell it for that 262 price point because that's how much properties are selling for. And the other thing with this too, this is constantly changing every single month. So you always want to be updated on it at least like once a month. So that way, you know what those numbers are. Because if I go back to the last time that we did Kansas City, I bet you the numbers over here are going to be a little bit more than they were last time. And that's because, again, markets are changing. It's a new season as well, too, where there's going to be heavy activity of fixing and flipping, buying and holding, whatever kind of projects are happening out there. But that's how I'm able to find my ARV of any single market whatsoever. And that's going through Zillow. If you want to go more specific, because you have specific buyers that like specific zip codes, you can keep on going through other cities as well too, or like neighborhoods, or you can go through those specific zip codes that your investors like as well too. But again, this is constantly changing every single month, so you always have to update your data on your CRM or whatever it is every single month, because again, that's how the markets are constantly changing. Now that I know where my properties are, how much I'm willing to spend like on a property, which is $183,000 or again 185, I'm gonna set my price point to that. So that way I can look for specific properties that are less than $185,000 and then look and see what kind of projects I'm able to find. So I'm gonna select houses. Out of these houses, I'm gonna set a price point of $185,000. And bam, out of however many results, I think there was like 1,000 or 100 results out of it. Now I got down to 3 results. These 3 results are kind of project properties. Is this the same street? Why do these two homes look like they're like the same? That's crazy. This says renovated, so I don't know if it's already like fully updated or what's going on. 6-room condo. Okay, so this is a multifamily. property. Let's see. It's been on the market for 47 days. Photo from 1930 prior to house movement. Pictures of moving process available. Oh, so their pictures are still to come, but I mean, it's been like 45 days. How long does it take to get all the stuff out? And then here we go. We have this other one. It's a 6 bedroom. So it looks like a lot of these are 6 bedroom opportunities. This has only been listed on the market for 5 days. Not bad whatsoever. But let's look at the pictures. So we can see the outside probably needs a little bit more work. Definitely some of this front patio over here. Windows, probably some of the windows as well. Oh yeah, definitely for sure the windows. Yeah, let me expand that a little bit more. So floor, I'm already gonna start listing some of the things that I need, so that way I can understand, is it gonna be light repairs, average repairs, or gut job repairs? So for this, I'm seeing floors for sure. Honestly, I'll say they can get a sand down and then get a new color in there whatsoever. But this is kind of like that Maywood type of color. But floors, paints for sure. Windows. Let's see what else. What else? Let me look at the major areas like the kitchen, the bathrooms. Ooh, for sure. Some of the walls. So walls, because there's a huge hole there. Bathroom for sure. Kitchen, it's another major project for, so definitely the kitchen. And there's a transition from hardwood floor to tile, so it really depends on the investor if they want to continue going with those floors, but already listed floors. Maybe some lighting as well too. So total 6 things. So floor, kitchen, bathrooms, paint, walls, and some lighting. Oh, this bathroom is done, so I don't really have to worry about this whatsoever. New vanity, changed the, again, you probably have to do, I think this is like a dark brown, so it also depends like on the theme that you want to stick with as well too. I don't know what this is. Hopefully it's not a well. Oh, this is the second floor because I can see like the gate down there. I don't know. I think that's the hole that we're covering up. How do you make a hole on a tile? That is crazy. But they basically this property needs a good amount of work, and I think it's big too. What is it, 1600? 1900. Okay, so let me start looking at it. So let me head over to my calculator real quick. So I'm trying to wholesale this property. How much is it listed for? 166,400. So 166,400 is the property. Um, I don't know if properties over here have basements, partially finished basements. Partially finished. Okay, so it does have a basement. Let me see if it gives me the square footage of a basement. 400 for, no, it does not give me the square footage of the basement. So the property is 1915 on the square footage, but it's a partial basement as well too. I'm gonna stick with 500 square feet for right now. It could be more, honestly, as well too, but it's already partially finished, so it doesn't need like a lot. It won't need like a lot of work. It just depends on what partially finished means, because I don't see it here in the pictures. I'm guessing this is the partially finished basement. No, yeah, I don't know what partially finished means on this type of property whatsoever, but we'll go through it in a little bit. So the property definitely needs average repairs. Let me bring the average repairs. Where's that? Where's that? Here we go. Average repairs are going to be costing between $25 to $40 per square foot. It is in the state of Massachusetts, so I know of oh, but it's Springfield. So actually, I was thinking Pennsylvania for some reason. I'm sorry. I know Pennsylvania is a little bit more expensive on those materials, so I'm gonna go with those $25 to $40 per square foot. I'm gonna go a little bit more on the extensive side of the $40 per square foot. And just to play it safe, because it says partially finished, I just don't understand what partially finished means, and I don't think they have pictures of it. I'm just gonna put like $10 per square foot on the basement for right now. Because I don't think it's gonna be a big basement. If it said like full partially finished basement, then that would mean like it's like a full kind of like the full layout of the home type of basement, where it's gonna be a bigger basement. But I don't know if it's like a half basement, quarter of a basement. I just don't know what size of that basement is. So that basement price will definitely vary. So for right now, roughly the repairs are $81,600. I want to make a 20% profit out of this deal. So 20%, I need to resell the property for $317 with 568. What's my ARV? My potential ARV is $262, $262,000. So far we're not looking good on the prices, especially like on the profit as well too. Maybe if I adjust my profit, no, it didn't change it as much either. So it's not my profit, it's not gonna be the repair. So that's where I have to confirm, can the property sell for that price point? 262, can it be more than that or will it be less? So the way I'm gonna be doing this, I'm gonna duplicate my property and let me see where exactly is it located. So that way I can start looking at that area. So I think it's this one right here. Yes. So let me look at the where our property is. And it looks like we have like some major roads over here, like Summer Avenue is one of those major roads I definitely have to be careful with. Let me take the price point away so that way I can see how much properties and just by looking, I'm simply just looking in the area. Just what's happening right now is the market is telling me that properties can sell for 262. My calculations or my numbers are telling me that my property needs to sell for $317,000. Just by simply looking, I'm not seeing a lot of $300,000 price point properties. I see one all the way over here across this other park, which that's perfectly fine. But that's a little bit too far out. I have this one, it's a little bit closer. Type of property selling for $400,000. It could be the area as well too. I don't know. Then the other one that I have that's closest is this $305,000 property. The only thing that is obstructing me from this is like these major roads. And here's the reason why. Because if I go through the maps of where the property is located, so let me use this right here. And if I go through the maps on, oh, why is it not popping up like the street viewer thing? Where's the street viewer? It's not that other one. Uh, let me use Redfin. Sorry. I'm just trying to look at the easiest way. Let me pull this property over here on Redfin, and I'm gonna use this little map over here. Bam. All right, cool. And the reason I'm questioning it is because of these major roads. So let me look at Summer Avenue. Summer Avenue, it's gonna be a major road where people are moving. It's gonna be like a double yellow line road, and usually with these roads are gonna be heavy traffic. And what heavy traffic major double yellow line roads mean, there's gonna be construction trucks, delivery trucks, buses. If there's like a bus line over here, is that somebody waiting for a bus? I don't know Springfield like that as well too. So I don't know how the buses are set up over here. But basically, these major roads are going to be a barrier or a closed end to a neighborhood. So the neighborhood over here on the left side is one neighborhood. The neighborhood over here on the right side is going to be a whole different neighborhood. So that's one road that I'm looking into. And then also another one I'm looking into is Belmont Avenue. Same thing. It's going to be a high traffic road. There's going to be some type of construction. Not a lot of traffic on this side as much. Looks like it's a little bit more like a town home, but I'm seeing a lot of traffic, maybe from like commuters as well too. So I kind of have to like stick within this neighborhood a little bit. What about White Street? Same thing with White Street. There you go. We have uh I was gonna say it's gonna be a trash truck, but it's just a construction truck just happening. And there it is. There's the construction happening right there. So it's gonna be like a major busy road that I want to stick in with. So when I'm looking for comps, I want to stick within the same neighborhood. Once I start going out a little bit more further in the neighborhood, it's and the reason why is because that's what an appraiser is gonna be looking into. They're gonna be looking within the same neighborhood. They want always gonna be comparing apples to apples. whatsoever, and they're not going to be crossing these major roads to be like, oh look, there's a property over here on this other street that is really close to like the square footage. It's a similar size, pretty much everything similar to the property I'm looking into, but it's sold for a lot more. So let me pull that comp, let me use that property as a comp because everything's the same, but even though it's in a whole different neighborhood, because this neighborhood is different from this neighborhood whatsoever. You can also check it through like prime, check like the crime as well too. But that's what I'm looking for. I'm sticking to staying within like the same neighborhood, and that's what I have to stick with this property whatsoever. But what I look for is what properties are under contract at the moment as well too. Because again, what I was mentioning earlier, the properties that are under contract are telling you are basically telling you what's actually happening with the market right now. And I'm trying to pay attention to my neighborhood over here really quick, trying to see what's available. But I'm seeing a lot more activity over here, a little bit more north. So there's more activity over here. And then I'm seeing the closer to the $300 price point. So this is where I kind of should be looking into. And on these some of these properties. So that should be like my area that I should be focusing instead of this one over here as well too. I didn't see anything over here more south. Let me just check it out one more time. Um yeah, I don't see anything whatsoever. So there's more activity happening over here, a little bit more north, where there's that $300 price point type of properties. But again, that's the neighborhood that I should be looking for instead. But now let me look what has actually sold. So going back to the presentation of the parameters, I should be looking for properties that have sold in the last 6 to 9 months, and I should be looking for like 3 to 5 updated type of properties. Um, and let's go with over here. Let's start filtering the square footage first. So 1915 is going to be 1600. I don't have 1600, so it looks like I have to go like 15. And then 300 is going to be 2250. Awesome. So properties over here. Oh, and then the biggest one is the time frame sold in the last 6 months. So far, I only have in my neighborhood, I only have one property that sold for 250. Was this fully updated or was this like on an as-is condition? And this looks like it was an as-is condition, a better shape condition than my subject property as well too. So that's one of them. And then two is going to be this other property sold in October. Um, Let me see if there's a description, maybe like recently updated or anything like that. Nope, no description whatsoever because it's a little bit too far out. And just by looking at the area as well too, there's not a lot of $300 price points. Again, I'm getting closer over here to this one. Not really updated as much either. This just sold in March for $306,000, but it looks like these were homeowners just because of all the stuff that is there. This is not a staged property. When it's a staged property, you're able to tell like it just looks a little bit um artificial. But this is like a homeowner that lived inside this property and they're trying to sell their home, which is it's a beautiful home as well too. Great color scheme, brown, really updated kitchen as well too. And this sold for like $306,000. The question is, how long did it take for it to sell for $306,000? Let's see. It was listed for sale in January, so it took about 2 months. January 13th, and yeah, took about 2 months for it to sell. Um, so we have this other one. So now I'm looking for similar properties, but now I have to play with the price point a little bit just because that's how it is. If I'm willing to go a little bit further than my neighborhood, is go further, reduce the radius, but sorry, increase like the radius, but then the price point is going to be reducing. The less I reduce the radius, then the property is going to be more accurate in terms of it. But this is the thing that I have to do with my due diligence because the property, it's a great project property. I'm claiming that as a great project property. It's just now I got to look for comps, and this is a strong comp where it's fully updated. Hardwood floor, kitchen, cabinets, paint, lighting, uh, doors as well too, vanity, windows, pretty much everything that we have to do to our subject property. This is it right over here. This is a prime example of getting the property fixed and flipped. And this sold in December. I'm not sure if this is like a property that got fixed and flipped, but let's see if it actually is. So the property, so the property was, so this is for sure a fix and flip property. It was sold for $60,000 in May 3rd of 2023, and it was listed for sale on November. So 6 months later, it was listed for $300,000 and ended up selling for $5,000 less than what it actually sold. And that's, if you go through the numbers again, what is it? Um, it sold for $294,000. So this is a buyer. So this is for sure a fix and flipper right over here. And I'm gonna understand how the how much profit they were able to make roughly depending on the work that they were able to do. So let me do 1583 first, the square footage of the property times what is it? $40 per square foot. 60, I'm gonna say they spent like $80,000 worth of repairs. Just I'm gonna play those games right now. So the property sold for 294. Um, minus commissions, I'm gonna say like 5%, 2.5%, and then minus closing costs, so a total of like 10%. So subtract 10% from this, minus the I'm gonna push it. Actually, I'm gonna push it a little bit. I'm gonna say $100,000 worth of repairs just because I can see it. And minus what the property was bought for, $60,000 as well too. So this investor roughly made plus $104,000 on this fix and flip deal. The reason why it could be plus is because of the time that depending if they bought it cash or they took out a loan, like a hard money loan, that's how much they're able to make on this deal whatsoever. More than $100,000 on this deal, and that's perfectly fine because it did take a little bit of a while for it to get built, and then it literally sold in roughly 1 month. So, and they were contingent on the contract by November 15th. So it was listed on November 9th. Within 6 days, it was already under contract. And that contract it sold right away. So this is for sure a fix and flip opportunity. And look how cheap this was bought out, $60,000. And that's because he was able to sell it for 200. They were trying to push it for like 300, but it sold for $5,000 less than what they were asking for. And that's perfectly fine. I'm sure that the investor was really satisfied with that deal whatsoever. So if I know who that investor is, I can for sure reach out to that investor, let them know about this deal. But then I know for sure they're not going to be investing in this deal. And also looking at the number of repairs that it needs, looking at the price point as well too. I know for sure they're gonna want to get it for a lot less than this because I'm not finding any comps besides that one. Which what was the price point for that? 294. Let's see. I'll tell you guys what the square price per square foot is. 294 divided by the square footage of 1583. It was $185 per square foot. So if I'm able to sell this subject property that I'm looking for $185 per square foot, it can sell for 354. Maybe, possibly. It depends if that's the conditioning. That's the market in a few months from now. But that's just one subject property for right now. Let's just continue looking for another one. I looked at that one. What about this one? I'll use this one just because it's in really great shape as well too. And it's a little bit bigger than the other one. 306,000 divided by 1620. That's 188. So 185, 188. And then the reason it's going to be selling a little bit more is because my subject property is bigger in the square footage, so it's probably going to take a little bit more money as well too. What about this 310 one? This one sold in, here's another one right here. So 310, 310 divided by 2000. Okay, that's good because it's a little bit bigger. 148. So 2,000 square foot home sold for $148 per square foot. $1,500 square foot home is selling for $185 per square foot. So what this is telling me is the $2,000 price point, 2,000 square foot homes are selling for less per square foot than the ones that are more on the 1,500 to like 1,800 a square foot. So now I know what kind of properties I should be looking for. I should be looking for properties less than 1,800, maybe less than 1,700 on the square foot, just because they're probably going to be selling for a little bit more and can definitely sell for quicker as well too. But that's going to be my potential resale price. So let me put my ARV of $332,000. Again, probably like 5 6 months, 5 months for it to get fully repaired. And I'm for sure gonna be pushing the repairs a little bit, just because I saw that other one, that first deal that we saw. So 91,000. I'm just gonna play it safe right now. That's how much it needs on repairs. And if an investor is willing to fix and flip on this deal, and the property can sell for $332,000 in 5 to 6 months, then they're willing to pay really close to like the asking price, 168 or 141. So it looks like the property is priced reasonably. The investor is going to be making $55,000 on this deal. So I'm not sure if they're going to be satisfied with that though, whatsoever. Because the other one made 100. I'm for sure. I know can guarantee for sure it made more than $100,000 on profit. But now I have to find an investor like that is willing and is interested in making half of that, which is $50,000 on this deal. Which I could find one, but that's going to be a little bit more challenging in terms of it, and that's pushing that ARV more than what the market is telling me as well too, because again, I'm not able to find a lot of deals that are selling more than $300,000, unless they're closer to like the 1,500 square foot price point whatsoever, because I don't see there's nothing selling for 330 something dollars in the area. I have this 380. um Again, just by looking at it, it looks like it's in a whole different area as well too. And then also the property sold back in October, so I always want to look for something as close as today or this year as well too. But a lot of these price points are just not closer to like that $330,000 price point. So the property is just a little overpriced. That's working with the agent directly, trying to negotiate on that deal. But also understand like the repairs as well too. I can say $90,000 worth of repairs, but the investor that I might want it, again, they could probably do, I'll probably do a little bit less. Then maybe they want to do a little bit more. But I'm just playing it too conservatively, and I want to be a little bit more aggressive. So I'll have to find for like look for other comps as well too, that fit more to our subject property, closer to that property that was listed for um that 200 I think it was this one. Yeah, that 2,000 square foot home that sold for $148 per square foot. Let me play that number. 140, 150, 150. There you go. I'm getting more realistic on that ARV price point of 285 or 286. Let's see, 286. 286. Yeah, that's gonna be a little bit more reasonable. And same thing, profits could be roughly like the same, but now it's just because the property's priced a lot more than what it needs to be. Unlike this person that got this property under contract for $60,000. Was it this one? Or I think it was the other one. That bought it for like $60,000. It's a realistic statement right there whatsoever. How about this one? How much did this person buy it for? This person bought it for 220. 220, and they're reselling it for 329. But they probably did like very light stuff as well too. Just light stuff sometimes takes make it a big difference as well too, in terms of like the materials. But that's pretty much gonna be a deal for it right there. So I'm gonna leave it open for some Q&A at this point. But hopefully that's able to help you guys understand whenever you're looking at a property. Again, if you go a little bit more extensive than the neighborhood, you have to play the price game as well too. So just you have to adjust like the prices, and also pay attention to like what's actually selling. Like to me, just in this area, I've never been to Springfield. I don't understand Springfield, but just by looking at the numbers, I'm seeing that properties less than then 1,600 square feet can sell quicker, can sell for more. Also, there's more activity a little bit more north, but over here it's not a bad neighborhood whatsoever. It's just the activities, it's still there, but the properties can sell for a little bit more. So there's properties can sell for more here, and there's more activity a little bit more north. So whenever I'm looking at properties and analyzing properties, I pay attention to those details because those numbers are not really going to be lying there whatsoever. So you guys are, if you have like any questions, you're able to like unmute yourselves for some Q&A. I know Cody, I'm not sure if you're still with us, if you have like a question by any chance. But you can I'll leave it open for that Q&A for right now.
Can you hear me?
Yes, there you go. I can hear you.
Awesome. So yeah, I have a few questions. When working with a realtor, do you provide the contracts or do you have them
So
provide the
you
contract?
work with agents. It's work. You have to use their contracts whatsoever. The biggest thing you have
Hmm.
to make sure, like whatever, like for example, right now Springfield, Massachusetts. I'll tell the agent, okay, can you write me up a Massachusetts standard contract, and they know what that means. From there, but you're gonna be using their contracts. The only thing you have to make sure is on your buyer side, it has to say if you're using your name on your LLC, it has to say and or assigns as the buyer, so that way you're able to assign your
Yeah.
contract to an investor.
Yeah, but most realtors don't want to work with wholesalers. So been told not to like say you're a wholesaler. How do you like assure that there's the reassignment aspect of the contract and the like of course the contingency period as well?
The contingency, it's your due diligence. You just want to make sure the property is like in the condition that it needs to. You need to send like
No,
a
100%.
to
We're
like
not.
make sure of that as well. But going back to your first statement of um now working with like wholesalers is properties get that are in the contract even from hedge funds as well too is perfectly normal to see NR assigns. This could be at assigned to like your trust. You just put in your name for right now because you don't know if it's going to go on the trust, maybe one of our partners as well too, because when we're talking with agents, is let them know that my partners and I we're looking into this deal whatsoever. I don't know
Yeah.
who's gonna be putting like their main name on it or whatsoever because we again you and your partners or like your buyers you're working together to make this deal happen regardless because at the end of the day it's really up to the offer that you're bringing and it's up to the seller. Um, so
Yep.
if the agent doesn't want to work with you for whatever reason, it's perfectly fine. Just move on to like somebody else that
But
that is willing to work with you.
you're saying most contracts have a reassignment.
Yeah.
Like, okay,
Oh,
okay. It's not like
that's
something I need to specify, like saying, oh, can you add the
nope.
reassignment on the contract? Okay.
Nope. It's just like I said, all companies, major companies, they do annual assigns because it's all about structuring for tax purposes and it's structuring for if they want to, like I said, put it on the trust, put it on the LLC, pull it on our retirement account for whatever it is. It's just annual assigns. It's perfectly normal to be seen across the board. It's just whenever you're talking with agents, just let them know like you and your partners interested in this deal. Our offer will be this. If the offer is too low, it's not an offense to the seller, to the homeowner. It's just that's just where our numbers make more sense for us. Sometimes the agent's going to tell you, well, offers have been coming a lot higher than what you're selling for. Well, if it's been on, if there's been higher offers, then why aren't you going back to those offers and let them know, like, we'll take your offer because we're not getting anything higher than that whatsoever. And so it just depends. It really all depends on the agent that you're working with. You need to have like that relationship with the agent, and also you need to let them know how you do business. And what I mean by how you do business is let them know, hey, I'm looking for this. You just being like straight up direct to them off the bat. I'm looking for these type of properties. I want to work with you. Yeah, I don't have an agent representing. I'm not an agent myself either. So I'm not sure if you're able to represent both sides so that way you can get both sides of the commission. If you're able to do so, perfectly fine. Cool. That's more commission for you. If you're not, there's a few ways they're able to do it. They know how to do it. It just depends on like on the broker that they work with that allows them to do it. And if for whatever reason it's like I'm not, I can't do it whatsoever with my broker, then you bring an unrepresented offer, and it's perfectly fine. It's just it's what they're limited to as well too. But
Yeah.
agents, they work on the interest for the seller. So if the
Mhm.
seller's motivation, you don't know what the seller's is, but you can simply ask like the agent, hey, you might be asking like why are they selling the home? Oh, the seller it was an elderly couple. They want to downsize. Oh, it was a family. The parents passed away, so it was a probate. But then the kids didn't want to deal with it whatsoever. So you want to understand like a little bit of what's happening behind the scenes. But again, the agent works in favor of the seller. So if the seller accepts your offer and they rejected all the other offers for whatever reason that were maybe a little bit higher, but then you're coming in and they're like really fed up with it that the property hasn't sold, then they're willing to move on forward because and the agent is obligated to move on forward with that because that's what the seller wants. They're in contract with the seller and what the seller needs and wants are.
No, I know about that whole process. Like I've been watching a lot of videos that there's just a
Mhm,
few things that the videos don't cover. Like I
mhm.
understand how to approach a deal, how to get the ARV for most properties and that
Awesome.
whole part, but just like the assignment thing. And then another thing I couldn't find online is when I put down earnest money for a
Mhm.
property that requires it and the deal goes like doesn't go through, do I get the money back?
Oh yeah, you get the money back. The only one that it's with your buyers directly that you make it non-refundable to them. Um, where they have, so let's say you put a EMD on a property that was like $1,000
Yeah.
and you put on the you have a buyer and they like the deal, but then they happen to back out of the deal. Part of that assignment of contract is to let them know that your EMD is non-refundable, and you can set that price point on the EMD if you want if they're really serious, is it's going to be like $2,000, depending on what your average EMD is as well too, or what you're constantly like, getting deals out of. To always play it safe, just go 1% um, out of the price point of a property, and that's going to be like your EMD that you have to deposit, and then from your buyers is you're gonna make it non-refundable. So sometimes then again, if your EMD is 1,000 and you tell them that their EMD is 2,000, then you're gonna have an extra $1,000 on your side just because they backed out of the deal and they knew for
Yeah.
sure from the get-go on that assignment or contract that their EMD is not refundable whatsoever. But on your
But
side, you get your $1,000.
like if I don't find an investor to re-sign the
Yeah,
contract, I
if
lose
you,
that $1,000
no,
that I
you get
put down.
your EMD back. You let the agent know, hey, we have to cancel the contract or whatsoever.
Okay.
And then because your EMDs could get deposited with the title company. And here's the thing with agents as well too, is know who their title company is and seeing if they work with a lot of investors. So that's why I always like to ask agents is I like to ask them like, hey, do you work with a lot of investors or you don't? If they say rarely, then the title company they're going to be using is not going to be like an investor friendly one, where uh where the fees are just going to be a little bit more extensive as well too. Then it's going to be more like on the like a first time home buyer type of title company as well too. So it really depends on their title company that they're using at the end of the day.
Okay. And then the property I've been working at,
Mhm.
or like that one of them, like I have a motivator seller. I'm working directly with the homeowner.
Awesome.
Um, and it's like a bit of a tricky situation getting the ARV. So
Okay.
it's downtown Chico, right next to the university. I'm not going to tell you the address because I don't have it under contract and
No, you're perfectly
I don't
fine.
trust anyone.
I don't need it. Just getting like a perspective close to like the university. It's fine. What's the square footage of the property?
So it's an office size building. I think it's about like 600 square feet.
Sorry, it's
And
a
so
what building? One more time.
it's like an office size building, like a small building, but it's on a 0.2 acre lot.
Okay.
Um, and I've been like trying to figure out and it's a um you're able to have residential or commercial use. So you can use that lot to build like a business, or you can use it to like build a like house or apartment complex, whatever you want with
Okay, so
it,
it's
and
a
it's legalized up to 5 stories.
um,
Um,
it's a what is that? I think it's a R. It's not a R1. It's a R2 zoning, and so
yeah, and there's like the only thing I can find close by is just like there's like a property that sold for like 3.2 mil, which is an apartment complex.
uh-huh.
Um, and then there's like another like 16 unit apartment complex that sold for like 1.4 million or something like that.
So to find your
Um,
comps for this, then you have to use
but it's on a busy street. So like if someone's looking to start a business, it's like 0.2 acre lot with like X1, like you can do anything with it. So, but like I don't know how to figure out the price to do that because everything in the neighborhood are all houses and stuff.
have
But
you
there's like I
you're
think
gonna be using
40,000 cars that pass by.
so you're gonna be using Crexy, correct? Because it sounds like it's gonna be more of a
Okay,
um of a commercial building.
yeah,
As do because it's your property. It sounds more like it's gonna be a land developer type of
yeah.
deal as well
Mhm.
too. To build like those five up to like 5 stories, depending if, or maybe like a land developer that does real estate and they want to build like townhomes as well too. But Crexy is gonna be your source to find your ARV. Why? Because it sounds like it's gonna be more of a commercial building to help you identify that ARV on that area that you're looking into for your property. Because it's really up to, it's a big lot. You said how big is the lot? Sorry?
Hey, I'm sorry, I got a call real quick. I didn't know if it was one of the realtors I was working with.
Oh, no worries.
Well, what did you say the past like 5 seconds? Like,
No, I was
I
asking
I
well, how big is the lot on your property?
0.2 acres, like a fifth of an acre.
Oh, point. Oh, so it's not even.
It's not like huge, but
Hmm.
like I,
It's just
like
also, yeah,
that's
so that's gonna be a townhome type of property then.
yeah. I don't
So
know. Like
so
I'm
here, so
still
this
new
is gonna
to the acreage type things, but
you're fine, you're fine. So quarter of an
and
acre, that's
also
8,000 square feet. I'll tell you right now.
also another problem that is with it is there's two abandoned cars in the lot.
Oh, that's pretty fine. That's just gonna get um
Because
that's
you
gonna get
can't
taken care of.
tow a car without the title. Like most companies won't tow the cars unless you own them. So it's like a whole process of getting a car removed.
It can
According
be
to online, I don't know.
uh it can be transferred
Like junkyards or anything won't accept the cars unless you have the title in hand.
and they're not the homeowners.
No, even if you own the home, if there's like uh abandoned abandoned car on your lot, you still like can't move it or something. It's like oh I don't know. Like that's what I did when I looked up online. That's what it told me, but I could be wrong.
No, no, no. I was just asking like the homeowners of that lot, they don't own they don't own
No.
those cars.
Mm-mm.
Okay, that's fine. So this is gonna be your you say your property is 0.20 of an acre. So this is gonna be your parameters just by looking at I'm looking Zillow doesn't let me do like um your square footage is like 8,000 square feet of 0.20 of an acre.
Yeah.
So that's putting
Um,
and doesn't let me do 2,500. So I can't do like 6,000. So I have to go a little bit below than that. But
no
this is
worries.
lot size, and then all of these. Here, let me actually show you. I think through, and you said Chico or Chino?
Chico.
Chico, okay. Um, there is a Chrome extension that I use. Let me see. It's called Comp Crunch.
Mhm.
So this helps me expedite a little bit on on finding what the average price is, especially for you on your case is like the lot size. So I'm gonna put in the
Yeah,
5,000 to a quarter of an acre. Cool. And so this is what the extension does. It gets like the results. It gives me what the average price is on all the properties, like all
yeah.
I can like
But
zoom in.
those are usually prices with a home on it. There's no home. There's just like a little office building.
Yeah, but we're focusing more on using the whole lot. So the whole
Mhm.
lot
Yeah,
is to be a land developing project. So that's where you have to find like a land developer type of buyer that is
yeah.
interested on buying this property. But what I'm trying to help you find is your ARV for like your comps. I don't know which side the university is on over here because it doesn't really show me. Over
It's
here,
just downtown area, but
closer downtown. Okay, cool.
it's right
Chaptown.
by the university too. So if you find the university,
I don't know. That's what I was trying to look for the university, but where the hell is the university? That's the airport. But basically to help you find like your ARV, that's what Comp Crunch does. It combines like all the properties, so it collects the 60 properties and it gives you like the average price of it, like what'll be like the lowest price of it, and then what's the median price of all of these. So that way it gives you like a perspective of like your ARV. So for your subject property, once like you know where exactly your property is, crunch it down to like the area, see where it is and use that Chrome extension Comp Crunch. So that way you're able to average out like all the properties combined as well too. And additionally, look for the properties that are under contract in your area as well too. Because right now you're looking for similar properties or you're looking for your ARV based on the lot size. So once you filter down like the lot size, ComeCrunch will analyze that or whatever information is available and then crunch it up for you so that we're able to determine like your ARV. Now for the project, again, it's going to be a land development project where I know for sure for even just a quarter of an acre, it's going to be like a townhome type of property that is going to be built. So it's going to be a demo of that office if it needed to be. Also the end buyer is going to be dealing with the cars as well too to figure out what they're able to do with that whatsoever. And then from there just take over like the deal depending on how much you're able to get it for, but at least it gives you like a perspective of how much if it was to be like a single family home that they wanted to build, they know what that will be. If they want to build townhomes, then they have up to 5 stories that they're able to build up to that. So that's how they're going to be making their money regardless at the end of the day. But to help you identify like your ARV, just go through use Chrome and then use that Comp Crunch to help you identify get a mix of all the results that pop up based on the square footage to crunch it down to a specific number so that way you're able to do like your numbers because this type of project that you're working is again is going to be more of a demo and then a developing type of home. If it's going to be like a full house or if it's going to be a townhome as well too, because it sounds like it has the availability of being an R1, which is could be a commercial, a residential building as well too, or multifamily type of project.
yeah. And are do you do this full time? Are you a full time wholesaler?
Me, no. I'm not a full-time wholesaler anymore. Occasionally, I do deals here and there. I mainly for just focus on coaching other people. I have like one-on-ones that I do, so that's my main thing that I'm doing. And occasionally, I come across some deals like on my own on my markets outside of California because I don't do California. I'm in California, but I started wholesaling virtually in some other states like Alabama, Indiana. Arkansas, Louisiana, Georgia. Well, not Georgia anymore. But those were most of my deals coming from just because I have strong buyers there and a lot of buyers here in California, but most of them are very picky here in California for whatever reason, and the prices are
Yeah.
just overly extensive as well too.
Yeah, I
Uh,
was trying to do some in California, but everyone just overbids because everyone is so fucking rich in California. So
Yeah, that's the other thing too. You're always gonna get like overbid as well too, and just it's just part of the game. I'll tell you
yeah,
that.
of course. Um, yeah, like were you at any point doing it full time though? Like
Uh,
before you were doing coaching?
Before I was doing
Like,
coaching.
what's your like? If you don't mind me asking, like, what's your track record like in terms of like wholesale and stuff?
Well, what are we? April? When was my last one that I did? My last wholesale, I didn't do any in during the winter time, so it's like October, November.
Mhm.
But all of it, that's when I was doing a lot of mainly like full time, and I was doing wholesaling from, was it May through November? What is that? 16 deals that I ended up doing during those months, and that was like more full time. But again, most of them out of state, and all those states are not as high as it is here in California in terms of like a lot of deals. So usually over there are going to be like 10,000 $10,000 wholesale fees, but
Yeah,
it
yeah.
pretty
I'm
much is a
focusing
lot
on
more.
Michigan at the time, or at, like currently.
Oh, Michigan,
Yeah.
awesome.
What's it called? Do you have any contract templates?
Yes, on my
If I
website,
get like directly with
yeah,
a
on
homeowner.
my
I know
website.
there's a bunch of free templates, but if you have one that's like up to date, because the one I had was like from like 2023 or something. So
Yeah, on my website I have them.